Hi, my name is Vani and I'm a CPA and founder of AZ Edge Accounting. What if I told you that the drive you took to meet a client last week, the desk you're sitting at right now, and the phone in your hand, all of that could be a tax deduction? Every time a new client comes to me, it's scary to see how business owners have left thousands of dollars on the table on their past tax returns, either because they don't know the rules or because their tax professional never took the time to guide them. Today I'm fixing that in under 5 minutes. Quick note on who qualifies: freelancers, contractors, side hustlers, small business owners. This is for you. If you have any self employment income, even part time, keep watching. If you're a straight W 2 employee with no side income, the federal law changed in 2018 and most of these don't apply to you anymore. But if you have got any business income at all, stay right here. Now let's start with your car. The IRS gives you two options. If you want simple method, you can go with the mileage deduction. Right now, that's 72.5 cents per mile. So if you drive 10,000 business miles in a year, that's a $7,250 deduction just for driving. If you want maximum benefit, here's the other route: actual expenses. You need to track every dollar: gas, insurance, repair, registration expenses, and deduct the percentage you used for the business. But that's not all. You can also deduct depreciation on top of that. So if your car depreciates by 12,000 in a year and you use it 70% for business, that's 8,400 in depreciation alone, and you're still deducting your gas, insurance, and repairs, etc., on top of it. So, what's the big rule? The big thing is if you deduct actual expenses, you cannot also claim the IRS standard mileage rate. Your daily commute to the office is also not deductible. But driving to a client meeting, visiting a job site, picking up supplies is a deduction. You are required by the IRS to maintain a strict mileage log proving business use of your car. Track your miles with an app like MileIQ. Don't try to reconstruct this at tax time, it's not going to hold up. Now let's talk about home office. I hear this one all the time. People say, like, I don't want to claim it because it will get me audited. That's a myth. Claim it correctly, and it's completely legitimate. The rule is the space has to be used regularly and exclusively for business. Kitchen table doesn't count. There should be a dedicated room or corner used only for work. So if you have that kind of setup, then you're good. There are two ways to calculate the home office deduction. The easy way is to calculate $5 per square foot up to 300 square feet. So that comes to a total of $1,500 in deduction. No receipts needed. The better way, or the other way to figure out what percentage of your home is your office, let's say, for example, 200, your home office area is 200 square feet out of a 2,000 square foot home, then the business use percentage is 10%. Now deduct 10% of your eligible home office expenses. If you are a renter, that includes your rent, utilities, and renter's insurance. If you are a homeowner, that includes your mortgage interest, property taxes, homeowners insurance, and utilities. So if you're paying 3,000 a month in those combined expenses, that 10% office claim puts $3,600 back in your pocket every year from a room you were already paying for. Okay, so now let's look at the phone and the internet expenses. This one takes about 30 seconds to calculate and almost nobody claims it. So, what percentage of your phone is for business use? If you can determine the business use percentage, and then claim a deduction for your phone bill based on the business use percentage. Same thing with the home internet. If you work from home and your bill is $80 a month, even a 50% business use claim gives you $480 back. You don't need a separate business line, just be able to explain your estimate. Okay, so let's look at all the deductions that we went over. So when you compare both the methods side by side, you can see that the simple method which is the standard auto mileage method and the home office, plus the phone and the internet results in $9,950 in deductions. And when you track the actual expenses, you end up with $17,400. So this is quite a lot of money to leave on the table. So don't make these three mistakes that trigger audits. Number one, claiming 100% business use on a car you clearly use personally. Be honest with your percentage. Two, claiming a home office where your kids also do homework or you watch TV. It has to be exclusive use of space. Number three, guessing at deductions with no documentation. If you get audited and cannot back it up with records, the deduction disappears and you owe penalties on top of it. So here's the recap: your car, your home office, your phone, and internet, all deductible, all completely legal, all potentially worth thousands of dollars you're currently leaving behind. If this helped, hit like and subscribe. I post tax strategies every week. And drop a comment with your biggest tax question or tax topic you want to learn about. I read every single one. Thank you so much for watching and see you in the next video.